Very good evening and welcome to this masterclass on breaking down blockchain from Kriya University, led by Professor Srinivas. The plan for this evening is as follows. My name is Ramnathan, and in many ways, I'm the host manager. I head the executive education at Kriya University. And the first few minutes, I would like to spend some time taking you down on the institution Kriya University, followed by a few minutes on what does the executive education business at Kriya University do, under whose banner this masterclass is being organized. And then I would like to present the faculty for this session, and then I hand over the session to the faculty. So welcome once again. And as you're aware, any institution is built by the leaders that they have. And we are very happy to say that we have an extremely distinguished board, which is active and contributes tremendously to the vision and direction of the institution, led by the Chancellor Wagul. And this is the institution, with a very distinguished pedigree and vintage. There are not many institutions, which have been around for 50 years and plus in the country today. And IFMR, this is one such institution. And it was started with the twin objectives of evangelizing financial knowledge and deep research in finance, with a very, very clear mandate, to touch the lives of the underprivileged from a financial solution point of view. It has excelled in both, and I must tell you that there cannot be any banker today whose life has not been touched by IFMR. And in terms of research, it has contributed tremendously to the financial inclusion of the underprivileged sections of the society. It has been associated with several central bank governors. It has, in fact, contributed to producing a few chief economic advisors, including the current chief economic advisor, who was erstwhile dean for some time at IFMR. And it has also contributed to the Nobel laureate. And it is to her credit, Esther Dufalo, who is part of the board. And I must tell you, there are not many institutions which can boast of that. It's to her credit, she said, the research done by IFMR, has contributed tremendously both to her book, her research, which led to the Nobel Prize. Now, there are three parts, to the institution called Kriya University. One, of course, is the IFMR Graduate School of Business, which we represent. Executive education is part of the IFMR GSB. You also have the School of Interwoven Arts and Science, apart from research. And in terms of executive education, the three pillars on which executive education is built is finance, technology, and sustainability. And in many ways, we offer solutions where we stitch together most, or if not all, parts of these three pillars. And we are very distinctly positioned for the simple reason we marry classical management topics to the interwoven arts and science. And not many business schools, do that. And we are largely focused on customized programs. We have worked with several well-known organizations across different verticals. And therefore, you can imagine the kind of solutions we bring to the marketplace. I have great pleasure in introducing Professor Srinivasan Kalyan Sundaram. And he has about 30 years plus of years of experience. And what is unique when you look at his profile is there are not many faculty who have straddled the three areas of BFSI, having worked for a bank, having taken part actively in research, and has contributed tremendously to the consulting area. And if you look at his 30 years of his journey, he was largely associated, if we talk about bank, he was associated with ICICI. Then, he went to the other side where, okay, he was part of the research team, okay, of ICICI. And then, okay, he moved further on, okay, to the technology space, working with Capgemini and later on at IBM. Very deep domain expertise in the area of treasury, derivatives trading, wealth management, market risk, and operation risk management. And when you take a closer look at his consulting experience, it's in area of process consulting, application portfolio rationalization, product selection and implementation, and due diligence, okay, with some of the global greats, which includes institutions like BNP Paribas, HSBCs, SunTrust, Morgan Stanley, the list goes on and on. And today he's a very sought after professional and a faculty in the area of blockchain. And I can't find a better person, okay, to be invited to talk about blockchain. Welcome to this program again. Thank you, Prof. Over to you now.
Thanks a lot, Mr. Ramanathan. And good evening to everyone. It's a pleasure to have all of you in this blockchain masterclass today. So we will move on to the objectives. Yeah. So as part of this session, what we will do is we will try to see a kind of sample class of our blockchain program, and we will go through the blockchain technology's importance and what critical role it plays in terms of not only BFSI, all the industries involved. We will see some of the pain points and difficulties of financial services industry to understand how blockchain technology can significantly contribute to addressing and solving some of these problems and leverage new avenues for the BFSI and all the other industries. And we will also touch upon what are the blockchain trends, and specifically we will dwell more into blockchain adoption in trade finance. We will also see a little bit of bank guarantee if time permits, and then we will move on to we will also touch upon the blockchain adoption in Indian banking industry. So as you can see, the financial services industry has got multiple pain points. See, to start with, from 2020, they were facing a major issue with COVID and business getting affected because of the COVID. There were a lot of people lost jobs and people were not able to go to job, all those stuff, which was resulting in NPAs and lesser loan dispersal. And it affected globally all the banks in terms of their profitability and all. And then what happened is there has been a lot of liquidity easing and money, circulated more to ensure that people don't have too much shortage of money and they are able to afford their day-to-day living and all, which has actually increased the money circulation globally. And that has resulted in tightening of monetary policy, tightening of entire liquidity by, right from US to Europe, everywhere. The interest rates have been raised more than 2% in US. It is now staring at 4 and it might even go to 5. And Europe, which has never seen interest rate hike, has seen a lot of interest rate hike, and all these things are burdening the banks in terms of their profitability. The second point, customer expectation. The customer today, the type of customer today is changing quite a lot. It is more of millennials and Gen Z, and of course, the expectation by millennials and Gen Z is such that they want everywhere digital and they want everything to happen very fast at the same time at a very low cost. The expectation is to get a lot at a reasonable cost because the team is not, the generation is not ready to wait for things, and they are actually very fast in their expectations. The third thing is customer retention. The customer retention is basically, there is a study which comes out with the data saying there is about 11% customer attrition every year, and stickiness of new customers, there are a lot of problems. and there is quite a bit of money lost on retaining the customer, rather while because of losing the customer, and that is again affecting banks in a major way. And then all of these things are also boiling down to net interest margin. That is the difference between net interest income and expense divided by average investable assets going down drastically. In fact, in US, it had touched in the Q3 21 2 percentage, nearly to 2 percentage, and it could have gone down even further now. The top 20 banks of US were having, net interest margin of around 2 percentage in Q3 2021. After that, there is a rate hike and other things which is pushing it further down. And as all of you might already be aware, banking is one of the most regulated industry. The entire BFSI, there is quite a lot of regulatory compliance that is needed. And fraud and financial crimes is one of the major issues of BFSI again. So to put it in a quantitative number, Statistica analysis says there is 2000 billion of Indian rupees, that is 2 lakh crores, is lost in a year in India on various types of fraud, which is affecting the banks. And credit card frauds, loan frauds, lot of problems are there. And globally also, this is on a much huge figure. And banks today have heavy competition. Traditionally, banks, NBFCs, investment banks used to compete. Today, there is a lot of competition from fintech companies. They are presenting, taking away all the cream layers of banking business, and that is affecting the profitable business of banks. Added to that, there are non-banking companies, lots of tech fin companies, telecom companies. All of them are competing with banks. For example, you can take, GPay, Facebook's WhatsApp payment, and then you can come to, Airtel Bank. All those things are affecting the bank's performance overall. And again, there are issues related to data security, which is very important for the banks. There are quite a bit of penalty and other problems banks will face if they lose the data, as well as the reputation is a major problem. And one more IT related problem banks have got is a lot of antiquated applications. They have several hundreds of applications where they could do with 5 or 6 applications, which is increasing the overall maintenance and related cost. The solution for this, see, one of the major solution for this is blockchain can bring lots of things together to solve some of these problems for the banks. So blockchain can bring new business model, cost reduction by eliminating middlemen, and it can provide a complete digital transformation and much quicker service to the customer, which can satisfy the younger generation. And the speed of execution on blockchain when you convert to digital and blockchain is phenomenal. And once the execution happens, automatically all the balances are updated and everybody is informed. That is again a major advantage. And blockchain reduces quite a lot of fraud. We will see a lot about this as we move forward. Blockchain, as you all know, is a secure solution because it's got 256-bit crypto encryption, which enables it to have complete security on the entire thing. Okay, so as many of you will know, financial services business runs on technology, and most of the other industries also today runs on technology quite a lot. And many of these technologies what is listed here, they are also used in other industries as well. There are quite a bit of existing technology, and there is quite a lot of emerging technologies. In the emerging technology, blockchain assumes a lot of importance, and it can transform the business in a much bigger way. We'll see about this in the next few slides. So why blockchain is a transformative technology? Why is it important? See, blockchain can bring new business models to the organizations. A consortium of banks, consortium of financial market companies, insurance companies can use blockchain platform as a solution for new business models. So this is possible. This is already happening quite a lot in terms of trade finance, bank guarantee, and many other areas. Insurance companies also use blockchain platform for shared revenue making. This is increasing the revenue of banks when they are going through a lot of other problems, which is a solid factor contributing to the strength of blockchain. Then, I would say blockchain is the only technology which has created technology based real assets, or rather assets worth US $2 trillion. In 2021, the value of cryptocurrencies, NFTs, and other decentralized finance related market cap put together has crossed 2 trillion. Of course, it has gone down a little bit because of various reasons, including what is happening on the economic liquidity tightening and all. But again, it will bounce back and it will come back. But no other technology has contributed this kind of US dollar 2 trillion of assets value, which is a real transformative capability of blockchain. And again, as we talk, we will see more digitalization of assets and digitalized asset traded into various blockchain platforms in a more convenient way. Like, equities, fixed income, lot of things will get digitalized. And already it is happening in terms of real estate. Dubai has got a real estate registry on blockchain where the real estate transfers, tracking, everything is becoming very easy. And one of the most important factor of blockchain is it helps build trust. Today, in the entire business world, trust is the most important thing. And because of its immutability, because of its security and counter fraud by design, combining multiple things together with the distributed ledger where the copies are available with multiple parties, there is a lot of trust when you are doing anything in blockchain, which is triggering quite a lot of trust required applications to move towards blockchain. We will see this as we move forward. And again, blockchain can bring quite a lot of counter fraud by design, because what happens is when you do things in blockchain, lot of things are quite transparent, and all the related parties know the entire uh, transaction details, audit trials, and in fact, you can even track the step-by-step movement of a particular asset or transaction, everything, which helps stop or reduce the fraud in a bigger way. We'll see some example of that as we move forward. Built-in cryptography technology. Today, there is a lot of problem about data hacking, and things are literally getting hacked and taken out. In this kind of situation, built-in cryptography is something which is differentiating blockchain from all other technologies. And again, speed of transaction. Once a particular transaction has been passed through, it reflects in all the ledgers. And if it is properly integrated by APIs to concerned books of different entities, the automatic updation happens in no time. It's all real-time transaction. We'll see this also as we move forward. Again, one more thing is, a lot of things can be controlled by smart contract, and all the terms and conditions meeting in smart contract. You don't need another middleman for controlling or facilitating a lot of things. Things can happen programmatically from smart contract. The same way, when the same ledger is shared by multiple parties and they are integrated in the system, it removes a lot of reconciliation. It can be quite a bit of achievement if we move this block, the entire stock trading and derivatives trading into blockchain. What will happen is you can achieve things like no need of separate brokerage, supervision, all those stuff. At the same time, you can have real-time settlement of all the transactions, like what is happening in payments today, which will transform the entire way the stock market and all work. T+1, T+2, X dividend, come dividend, lot of these things will go. The other strength of blockchain is it can provide digital identity. When you have a digital identity, it can be used for quite a lot of things. See, it can be used for KYC, AML, it can be used for voting, it can be used for delivering governmental benefits to individuals. Digital identity can be linked to your land registry, property registry, which will change the way a lot of things work. It is going to happen. A lot of things has already happened. It is going to happen further. So when I say it is going to happen, we are already at a stage where a lot of things are happening and quite a bit of momentum has got captured. Web3 and blockchain, there's a lot, both of them are moved in hand in hand. Web3 is leveraging blockchain as the backbone for the entire decentralized transactions. So the objective of web3 is today everything is controlled by large corporate world and in the internet area. So what Web3 is trying is decentralize a lot of these contents into holding by smaller groups and not controlled by only a few large corporates, which can free the entire thing. So Web 1 was like read. Web 2 was read and write. Web 3 is going to be read, write, and own. That is what most of the creators will own their content in the internet and operate, and that will be backed by blockchain. As traditional companies move to Web3, there'll be a lot of blockchain adoption by several companies. And blockchain is coming into mainstream adoption. There is quite a lot of adoption happening wherever there is a need for trust, security, and speed and cost reduction in BFSI and all other industries as well. This will really improve overall adoption of blockchain. CBDCs is gaining quite a lot of action. 2022 itself saw a lot of action. 23 is going to be really a game changer, because in 23, already you would have seen RBI launching, wholesale and retail CBDCs. In addition to that, what is happening is uh, Swift is testing with Capgemini, or already it has done a pilot and tested global interoperability of CBDCs. When CBDCs become globally interoperable, there'll be a lot of international payments, international transactions that will happen through CBDC, which will change the way the entire thing will work. There'll be a lot of inclusive finance use cases. There'll be quite a lot of, you know, entire difficulty. International payments is several billions of amount, and it will reduce the cost as well as increase the speed. The other part I already touched it a bit, asset tokenization. In addition to NFT tokenization, there is going to be a lot of tokenization in blockchain for various securities, and it is going to become completely digital, and it will be handled with blockchain based exchanges, which will change the game for asset trading. What I mean is several types of assets. And blockchain and IoT integration is working extremely well. And there are a lot of machine to machine information exchange. When in a supply chain, when the goods are moving from one place to another, it is not just tracked by manual intervention. There is a lot of IoT based, satellite based communication to blockchain ledger. So there is a machine to machine information exchange which cannot be questioned by anybody, and it proves as a evidence for any problems in supply chain, as well as increases the trackability of delivery and all. And this adoption is already happening, and it will gain more momentum as we move forward. And green blockchain initiatives, there are some problems with the blockchain about energy and all. As you would have seen, Ethereum moved to energy intensive, from an energy intensive proof of work to proof of stake. More greenification will also trigger a lot of action in blockchain. So what is blockchain? I will not spend too much time on basic blockchain. We will do it quite a lot when you come part of our blockchain certification course. But I'll touch upon what is blockchain a little bit and then move forward. Blockchain is nothing but a distributed ledger. The copy of blockchain is available with multiple entities, multiple parties, so that no one can change any of the content on a singular way. And any, in fact, the data which is stored, it is immutable. So when a new transaction is done, the related party's consent is taken so that it is agreed upon and then entered into the record, get into everybody's record, which is changing the entire game. We should be very clear when we talk about cryptocurrencies, bitcoins, Ethereum, and all, and blockchain applications. See, Bitcoin, Ethereum, NFT are all application of blockchain platform as a technology, and they are individual use cases of blockchain technology adoption. They are not blockchain. Blockchain is much bigger than all these individual adoption, and there are quite a bit of adoption possible with blockchain, and that is already happening, and it will happen as we move forward more and more. And it is very helpful to digitize many business areas. So what is the problem with the traditional ledger? Let's assume there is a project work done by multiple parties. Each party maintains its book, and every party has got separate records. As you can see in the slide, there is a separate party wise participant A, participant B records, bank records, insurer records, regulator records, auditor records. Everybody try to maintain their own records, their own evidence, their own audit trail, everything. What happens is there is a lot of duplication. There is a lot of possibility of error in recording, or omission, and missing records and other things, so which can create inefficiency, multiple duplication, as well as it can create quite a lot of you know uh, reconciliation work between all the parties involved, which is really a problem which is faced by traditional ledger. So solution from distributed ledger: there is a single ledger, everybody uses that ledger, and they give consensus when a transaction happens. And this ledger, a copy can be available with them if they want to have a copy, or they can have an API based integration. They can both have a copy as well as integration to their internal records, so that anything they have to do, their internal ERP, internal accounting, they can take care of the entire thing. So the advantage of this is, first, consensus. Second is, everybody knows who has initiated the transaction, who all have given the approval. So there is a complete provenance of what is happening. Then there is a immutability on the top of it. When it is immutable, you cannot look into you cannot just like that change one party, or no party can change. If there is a mistake, it has to be rectified by a correction entry. Okay, that is the level of immutability. And of course, crypto security, all those stuff on this, it becomes quite useful for a business application. So that is the solution distributed ledger is providing. So what are the components of blockchain? We'll see many of these things detailed in our blockchain certification course. In short here, the distributed ledger we discussed, smart contract provides for all types of programming, and making the blockchain independent of manual intervention. Once the smart contract is agreed between the parties involved in the blockchain platform, the further settlement, further actions can be programmed into smart contract, which can help in terms of controlling the further developments and taking proper action for based on the further developments. Timestamp is one of the very useful mechanism in blockchain. You have a timestamp for each and every transaction, and that works as a complete audit trail, as well as it is immutable. Nobody can modify themselves. It is system based timestamp. Then consensus mechanism. When people give consensus, it's very clear they have agreed and they have gone through the details. So tomorrow somebody cannot come and say, no, 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 I have not seen this and all. Consensus mechanism adds on to the trust in a big way. Of course, cryptography is very important part of blockchain. See, the advantage of blockchain is it is building all these things together. You can do some of these things by bringing several technologies together, but the advantage of blockchain is as a single technology, it is able to bring all these things together, and these are stored in blocks, and each block is connected to the other block uh, by a puzzle and other things. So what are the advantage or benefits of blockchain? Blockchain is, we discussed about various features of blockchain. Blockchain gives complete trust to the system built. So for any front office application, when the customer order or anything happens, if it is on blockchain, it is, immutable from there, and there are no changes. Any delivery date committed, any the variant of the product ordered, everything is very clearly visible, and it cannot be changed. So nobody can blame each other that this is not what I ordered, or this is not what I agreed to, all those stuff. So the entire trust is very, very useful, not just in purchase and sale, everywhere. We will see with the trade finance case study how it helps. The other benefit of decentralized, which is used quite a lot in decentralized finance, cryptocurrency and NFT, is basically it is not controlled by any centralized banks and financial institutions. It is controlled in a decentralized way by the people who are operating, interacting on, and many. But what will happen is when we go for business based blockchain applications like a consortium of banks, or supply chain focused application, or land registry focused government application, there will be some amount of permissioned ledger that will be used, where there will be controlling entity. The decentralized portion may not be that much used in you know most of the business applications, unless it is related to decentralized finance related area. Security and privacy, we touched upon this. Blockchain is very good for ensuring security, and it can also provide adequate privacy in terms of those who need access, only they get access. Not everybody has access to everything. Reduced reconciliation, middleman cost, we touched upon this. Basically, the middleman can be eliminated quite a lot. Uh, for example, in case of a tenancy agreement, there is a landlord, there is a person requesting for renting a property. They can enter into a smart contract based on blockchain, and that smart contract can say that these are the conditions to be fulfilled from landlord and tenant side. And once it is done, once everybody says, oh, all these conditions are met with, automatically the advance payment can be transferred to the landlord, and rental money can be transferred to the landlord. There is no need of middleman. I'm taking this example to simplify the situation. You can think that this can be applicable for so many business transactions where there is quite a lot of middleman adding a lot of cost. And of course, apart from middleman, it helps in terms of digitalization. It reduces reconciliation. All these things cause quite a good amount of cost reduction. The speed of transaction, we touched upon this. We discussed about an example of securities trading on blockchain platform where things can be instantaneous. Immutability, we discussed quite a lot. Traceability is an excellent feature of blockchain. Today, for most of the audit, most of the you know validation or probing any fraud or any transaction, you need quite a lot of traceability, and The best part of blockchain, it has got absolute traceability. It takes care of quite a lot of those things. Counter fraud by design, we discussed about this. We will see example as part of trade finance solution. Then disruptive technology changing the game. Blockchain provides for a lot of innovation. In fact, what we discussed in terms of new business model is a direct innovation of new business model for banks, which was not possible in the past with other technologies. So blockchain in financial services, how blockchain will disrupt the financial services industry. We touched upon many of these parts. Reduced cost and middleman can help financial services in a big way. Embedded compliance systems, when you are building the platform for blockchain, you can embed the entire compliance required over there itself, and it can be built on the smart contract. It can keep monitoring the compliance and ensure the compliance happens. In addition to that, if you look at the right side, there is a automated regulatory procedures. You can automate quite a lot of regulatory procedures in the smart contract as well. And in addition, you can make regulator as part of the blockchain and give him access to what is required. So the regulator need not come to the companies and every time ask for different data. They can look at what is available as access to them, and validate a lot of them, and specific points where they need further information, further scrutiny, they can only take that and ask for information. It will reduce a lot of compliance headache of you know um, all the companies involved in generating this blockchain platform. Reduced settlement times. I said the settlement can be instantaneous if transaction happens on blockchain. Securities lending is one of the activity what happens in you know um, stock exchanges. The security lending can be handled and tracked the entire thing by blockchain, and it can be facilitated. All the dividend payments, if the equities and all the blockchain register is available on blockchain platform, dividend payment can be instantaneous. Apart from this, there could be corporate actions related e-voting directly into blockchain, which can give complete transparency as well as immutability to the entire thing. So these are some of the major benefits blockchain can give financial services. We'll see with some case study. Yeah. So we come to the trade finance. It's one of the sweet spot for blockchain. What is trade finance? Trade finance signifies financing for trade. Basically, what happens is when there is most of the time trade finance is used when there is a importer and exporter involved, that is in an international trade. Also, trade finance is used for financing purposes even within a single country. But in terms of getting proper LOC and ensuring trust for payments and all, it is much more useful in international trade. And when there is a trade between two different parties, they can actually, based on the contract they are executing, they can go to the bank, get finance, so that the manufacturing of that goods for import for exporter becomes easier, and he has adequate working capital to do that. Okay, so what is the pain point in this simple trade finance? See, trade finance offered by banks is costly and time consuming. See, trade finance involves quite a lot of documents, and it involves time consuming activities. In fact, most of the large companies, if you take the example of some of the big conglomerate like Reliance, Ambani's, and L&T's, they will have a large department to open the trade finance related LOCs, tracking them and ensuring the delivery happens against that. It is closed on a timely basis, payments released. So there's a lot of activity. For small companies, it is going to be almost impossible. Even for big companies, it's a lot of cost intensive and labor intensive job, which is really, an area where there could be a lot of cost reduction by blockchain. And also, in addition to the paperwork, reconciliation, and time-consuming task, there are multiple problems. We have seen this in reality. I will touch upon that. So there are companies which do, a lot of fraud. They seek for multiple financing on the same single invoice or single trade order. And then there are fraudulent documents. Some company manipulates and creates a invoice which is not there at all. So they create an invoice and get letter of credit on that. And there are fraudulent legal entities created, for this purpose. So there are multiple ways. Several companies do fraud on that. It's not new for India itself. We have seen quite a lot of these kind of fraud. I'll just share my screen. There was quite a bit of letter of understanding issued by Punjab National Bank executive in favor of Nirav Modi and Mehul Chokshi, all those people. And it was not backed by any collateral, and it was not backed by real foreign companies export to them and all. They were import to them and all, and it was not having any proper payment that was coming back. Okay, so this has resulted in a major fraud. It is about 11,300 crores, as you can see here, is the fraud that has happened in BNP, about 2 billion of fraud. And see, this has been a very simple scam which has been run for about 7 years. There was a bank employee, Gokulnath Shetty, Deputy General Manager in the Forex Department. He has issued swift messages guaranteeing international banks, Indian banks, foreign branches that they are taking responsibility on behalf of Nirav Modi's firms to pay that money, but they have not entered this data into the core banking at all, and it has not been reconciled as well. Because of that reason, it was not tracked for 7 years and it became a big problem. Okay, so looking at this fraud, lots of fintech blockchain experts have commented what happened at PNB was the result of numerous systemic failures to detect simple human malfeasance. Okay, so they have clearly said if it has been on blockchain and blockchain is integrated with the core banking by API, most of these things would have not happened, and it could have really prevented a lot of these frauds. At least it would have prevented from things happening for so long. See, 7 years is a very long year to track this and all. If the entire thing is on the blockchain, there will be automatic reconciliation with core banking, and you know there can be automatic APIs based link for Swift, which cannot be triggered without blockchain sending those instructions. It would have completely stopped the fraud. That is the level of thing that has happened, and now slowly we are trying to get out of it. So I'll stop. I'll I'll go back to the presentation here. So based on this, what is already happening is in Indian trade finance, uh, RBI has created a initiative. They have called most of the large banks, State Bank of India, HDFC, ICICI Bank, and Axis Bank, Bank of Baroda, Union Bank of India. Everybody has been brought together, and they have created the initiative of trade finance on blockchain. It has happened in June 24, 2022. The project is going on currently, and this is going to change the way the trade finance happens in India, which can reduce a lot of counter fraud. So if RBI is initiating this and it is assuming this is going to happen well, you can understand, the kind of belief they are putting it on blockchain to address this kind of fraud issues. So the other part is CBDC. In terms of CBDC, the finance ministry has told in the retail part of central bank digital currency, retail portion of the central bank digital currency, there are several components which are based on blockchain, which again tells us the RBI, the entire BFSI believes on blockchain, where the trust is needed, where they want counter fraud and all, and it is going to gain momentum from here. There'll be a lot of action as we go forward. So in a simple trade finance, what happens is lot of things are covered in smart contract. The definition of contractual terms and all happens as part of the smart contract. The trade contract is subsequently shared with the importer bank, and then the buyer and seller agrees to the trade contract, based on which the importer banks issues a letter of credit in favor of the exporter's bank, and the exporter banks actually processes and give trade finance based on that to the exporter. And once all the terms and conditions are fulfilled of the entire export, the payment again takes place by the exporter to the exporter bank, and then whatever remaining payment, it goes to the importer bank and to the importer. Sorry, the opposite, importer to the exporter. So there are a lot of benefits banks are getting out of this. It will reduce a lot of manual effort, reconciliations, and tracking of the entire thing and all. And from the importer and exporter, it will reduce the amount of time taken to issue a LC from several weeks to 1 or 2 days at the maximum. And they can get the trade finance also in a day or two, very fast, because the trade itself happens on blockchain ledger. And then based on that blockchain ledger, the trade has got smart contract, which defines all the terms and conditions. And that goes as the contract soft copy to the bank. Hard copy is separately given, but bank is comfortable with the soft contract. It can process the trade finance on the platform itself, blockchain platform itself. Now the importer, exporter, importer bank, exporter bank, everybody is in the same system. And there are in fact multiple banks, exporter banks, multiple importer banks are there. So same invoice cannot be financed multiple times. And and the importer is confirming his import, so there cannot be invoice created by the exporter without any importer. Quite a lot of fraudulent activities are completely controlled and eliminated here. So traditionally, everything was happening in the left side. If you see, importer and exporter, there are a lot of the manual contract. It goes from here to there. It takes lot of time. After that, the contract is sent to the importer's bank. Importer sends things to exporter bank. It is time consuming, quite a bit of exchange of manual records, very painful. Whereas right side, if you see, everything is in the central blockchain trade finance platform, and it is substantiated by some movement of documents as required by regulatory, but most of the actions happen on the centralized trade finance platform. The entire purchase and sale itself happens on trade finance blockchain platform, which is used by the importer bank to finance, exporter bank to accept and all, which becomes completely transparent and fast, which is a big advantage of distributed ledger. One thing we will learn when we get into the blockchain certification courses, every business case you need to validate thoroughly whether it makes sense for blockchain or not. You are not supposed to use the biggest hammer for very small nail. You have to understand where blockchain is useful, use there, but avoid using it everywhere. Okay, so you do analysis. What are the benefits of blockchain? What is applicable here? Is it significant or not? If you look at most of the benefits, trust, security and privacy, reduced reconciliation middleman, speed of transaction, immutability, traceability, counter fraud by design, disruptive technology with the blockchain consortium of banks platform, all these things are applicable to this. So this is very good use case for blockchain. And one of the things doesn't apply is decentralized, because it is consortium of banks which control. You don't need to worry one or two not applicable, but where significant portions are applicable and it has got very significant meaning to your use case, those are the use case you have to select and use. And there are few other things about the ecosystem you have to capture and all. We'll see some of these when you join us in the certificate program. So this is a case study of V.Trade, which is a trade finance blockchain platform seen from the eyes of the customers of V.Trade, which is Flattered. Flattered was producing shoes, chappals, and heels, loafers, boots, several types of slippers. They were actually specializing in non-chrome based leather for shoe material, and that is because chrome brings a lot of allergy and other problem in the leather products, and non-chrome is also sustainable and economic friendly, which is quite useful for avoiding environmental damage. And they were very successful. There was a lot of customers who were approaching them. What problem they started having is they have to produce more. They were depending upon import from Spain for doing this business. When they were to import from Spain, they can make payment only when the goods are shipped out of Spain, which was late for their importer. And there were a lot of working capital problem for Flattered. The CEO of Flattered, Lidon, has discussed quite a lot on the liquidity issue. You can see the comments what he has given. This is where V.Trade stepped in. I mean, this is one of the customer where V.Trade stepped in and helped quite a lot in terms of providing the entire trade happening on the platform. Added to that, most of the documents and all are digitized, because Flattered is a small company. They cannot have a department for a letter of credit, LC processing and all. It reduced the cost, it reduced the paperwork, it made things digital, and it has enabled a very low fees charges and all, which helped companies like Flattered quite a lot. And that is what has been appreciated by the CEO of Flattered. About V.Trade, it's a consortium of banks. It started with 7 banks in the beginning, and it moved on to become 17 banks. Uh, it moved on to become, yes, 17 banks consortium, which was actually making use of this to make a lot of trade finance transactions around Europe and certain other territories outside Europe as well, which was made completely on a blockchain platform. IBM helped this project to happen. It's on Hyperledger based blockchain platform, and it's quite a bit. Okay, so one more thing is they have covered most of the environment of banks which were doing European based trade finance, which is also important to make any use case implementation in blockchain successful. We'll see about this when we move on to the blockchain certification course. In the interest of time, again, Ligon is a major bank guarantee solution. In the interest of time, we are having slight shortage, and I'll skip this case study. It's a very good case study of Australia and New Zealand region. All the big banks came together and built a bank guarantee platform by which all the retail small clients of banks use this platform to get bank guarantee, and it is completely digitalized. Quite a lot of things happen on paperless basis. There is a lot of material information available on this in the web as well. So I would like to conclude with this slide. Blockchain is different from rest of the businesses. You need to understand where to use it, how to use it, whether it is the right fit. That is one portion. And when we go to the implementation, you need to be very clear about what are the steps you need to do. What are the SDLC you have to follow. You need to do a blockchain value creation for business. It's a very detailed area. We will see it when we discuss, when you all get into the blockchain certification program. Blockchain should use design thinking, and it should go with a pilot POC, or validating the concept, and it should be having multiple minimum viable products, not waiting for the final product. And once everything is stabilized, you will go step by step to production, and you will use a complete agile methodology on development of blockchain projects. So with that, I will conclude the blockchain session. I would request Professor
Yeah, we'll go to
Mr.
the Q&A now.
Yeah, we'll go to the Q&A now. So you can, so any Q&A, how do we want to do this? Do we have Q&As in the chat or?
Yeah, I think there were two questions.
Sure, sure,
In
sure.
fact,
Let's
one of them
address.
raised his hand also.
Sure, sure.
So, yeah.
Yeah, CBDC is central bank digital currency. Of course, it is very much central bank digital currency. And that is where it has been introduced for retail as well as corporate wholesale banking by, in fact, RBA as well. There are more than 60 countries which is already either brought in CBDC or in the process of bringing in CBDCs. And SWIFT has worked on CBDC interoperability between multiple central bank digital currency. So CBDCs can be used for settlement across country international payments, which will be a excellent use case for cost reduction and increasing the speed. Thank you.
So there's Satish Kumar who asks, at its core, blockchain aims at decentralizing, whereas banks flourished in a centralized environment by playing the trusted player role. How this disconnect will be overcome by banks, financial institutions in the blockchain-enabled world?
Absolutely. Good question. Good question. So as I see, both the worlds will continue to exist. Banks, financial institutions, insurance companies, and of course, for that matter, several industries in the area of supply chain, healthcare, and by the government in terms of voting, land registry, quite a lot of area. There will be permissioned blockchain, which will be centralized blockchain. Whereas the decentralized blockchain followed by Web 3.0 and all our decentralized finance activity, cryptocurrency, NFT, all these things will also continue to coexist, and they will actually find a peace between each other working together. And blockchain is a technology and platform. It is not just a decentralization. So it will enable both to happen. That's my view on this.
I mean, Debashish raised his hand. Debashish, would you like to
ask any question?
Hi. So my question is that every organization wants to keep certain things as confidential and
Right.
as their core innovation, things like that. But
Absolutely.
blockchain is interconnected. Will it expose the thing too much?
I wouldn't say that. Blockchain has got a complete security, privacy, access controls, all those data. In fact, when a transaction happens, for example, let us take the trade finance. When a trade finance transaction happens, uh, the actual purchase and sale will be known only to the buyer and seller and the importer bank and exporter bank. Even the rate of interest charged by the uh, exporter bank will be known only to the exporter. It will not be even known to the importer bank. That level of secrecy can be maintained in blockchain by access restrictions and privacy. So that will be really followed completely in blockchain. It can be done while designing the blockchain. Thanks for the question, Debasis.
So Srinivasan, we have focused a lot on the banking segment.
Arun,
how does this work in the other industries? Like, for instance, if you take a look at manufacturing, if you take a look at construction industry, how does blockchain, primarily a lot of transactions in the banking financial services, but other industries, how is it applicable?
Thanks a lot for the very good question here. See, the entire manufacturing industry, there are several use cases right from the front office sales, which can happen on blockchain, which will give a quite strong comfort to the customer. Apart from that, the entire supply chain is one of the important area for several manufacturing companies. The supply chain will be transformed with blockchain. Today, there are a lot of different problems, like you don't know when a particular raw material is going to come, or for that matter, for heavy goods manufacturers, their customers don't know when exactly the delivery of particular goods is going to come, whether it is on the right route, whether it is lost somewhere, damaged. A lot of things are not known. The entire supply chain industry is going for transformation, making use of blockchain and IoT together, which will change the way manufacturing companies adopt blockchain. And in addition to that, what will happen is construction industry, the entire maintenance of flat sales and purchase ownership, everything can be moved to blockchain registry, which can help in terms of never having problem with same flat 2 3 people bringing the documents and claiming as if their own. So there is going to be so many use cases where blockchain will be useful for all area where there is a huge trust gap, and trust is important, or immutability and or provenance tracking is important. For example, in the food industry, there is a lot of food tracking and food quality validation, making use of provenance capability of blockchain. So if there is any particular food item got wasted, they track it back to which particular consignment this has come, which particular source it has come, whether the other things are in place, shape or not, whether we have to call back all those food items. There are several use cases for all the industries that is happening already in blockchain.
Arun Prasad wanting to, raised a hand. So
Yes, good evening. So, blockchain here uses distributed ledger technology, right, to decouple ledgers and make sure it is decentralized. In the event of any particular ledger being compromised, is there a widely accepted way of retrieving the stolen information or compromised information? Because what I feel is that's the thing which is stopping us from adopting it in a larger scale, because there is no defined way of retrieving compromised data from the DTL. Do you have any
Right.
points on this?
So my thought process on this is, see, when you have distributed ledger and there are multiple entities which have got the ledger copies, see, there are entities which are large, like take a set of manufacturing companies getting into a consortium and having a blockchain platform. The control copy of the ledger should be available with the manufacturing companies, which are large and which can put enough security and ensure not much of huge data leakage happens. And what you said is more applicable for when there is a public blockchain where there is everybody has got control, like cryptocurrency, or for that matter NFTs, where everybody has to give consensus, everybody has a copy, can have a copy, can control it also, can compromise the ledger. Where it is centralized with a few large organization, there can be a lot of security built. And even in spite of that, if there are laws, the data can be recovered out of the entities where there is no compromise has happened, unless the impact has come in and changed the record for everybody. Okay, so this problem, when it is adopted in business, it is not that big, and it is much less compared to a lot of other technologies, I would say, because it has got 256 digit encryption already built in, and we are using so many internet technologies and other things where there are no such huge encryption is happening. So the probability is less, the solution is possible. That is my answer to this question.
Thank you.
Yeah, Debashish,
Debashish, go ahead.
So I'm saying that already in service and manufacturing industry, we are using ERPs in a big way. So which captures everything, links everything with everyone, whatever is required. In what way then blockchain will supersede or complement this ERP?
Correct. Very good question, Debashish. Thanks. See what happens in manufacturing companies. The ERP takes care of lots of internal things, as you see. Okay, it is not touching any of the external aspects of the manufacturing companies. The example which I have taken, the customer order is kind of an external area. You can do it with CRM and other things, but when you are doing with blockchain, the customer is absolutely clear. This is what he has agreed based on what he has ordered, what is the smart contract and all. That is one portion. The second portion, as I discussed in the supply chain, today ERP supply chains are enabling, what are the components needed, how much should be ordered, how much we need these items, the BOM items in terms of uh, ordering to the sellers, or rather our suppliers. Okay, but whether the things are coming from the supplier properly, where is it, and when it will reach us, the expectancy and ensuring that it is happening on a timely basis, that portion is not available in ERP, because ERP is more organization internal things taken care. Same way, the finished goods, when there are heavy equipments that are delivered, once it is dispatched outside the organization, based on different informations, freight forwarding and all what they say, it gets updated. But if it is a heavy equipment delivered for as finished goods, and if it is exported and all, the tracking of the entire thing can happen with IoT and blockchain, which is external to the organization, things happening outside. But you need to take care the customer is satisfied, the customer is getting it in time. If there are problems, you are going to lose. If there are frauds, people are, cornering some of your consignment. All those things, the external part can be handled by blockchain. So there are newer areas which blockchain can help you with.
Thank you, Professor.
Thanks a lot. Thanks a lot.
So we move to the last part of the session, where I would like to take you through a small peep into the two programs, okay, that we are launching. And as you can see, this is just a precursor, okay, to the program, okay, that we are launching. We are launching two programs. One is aimed at the what do you call sub 5 years of experience. We are calling it, okay, the certificate program in blockchain management. So if you're an executive with about 5 years of experience, it is aimed at you. If you're a manager with about 3 years of experience, I think, okay, this program, okay, is for you. And we also have the second program, which is a certificate program in blockchain leadership, which is aimed at the strategic intent, okay, and how blockchain can help you lead the organization leveraging blockchain. Both these programs are 4 months duration, priced, okay, extremely reasonably at about 40,000 rupees per participant, and it will be covered, okay, in a period of 12 weeks. And if you look at it very, very closely, it is led by the industry experts. There would be global faculty supporting Professor Srinivasan in this endeavor. And it is the certificate program of blockchain ideal, okay, for working professionals. And it will be done on weekends, fully online, and very application oriented. And it would expose you, okay, to understanding the disruptive technology that blockchain is, and how, okay, it can be leveraged to reduce financial crime, fraud. How do you successfully implement it, okay, irrespective of the industry in projects? And it would also help you understand what would be a suitable technology framework to leverage blockchain in your projects. And it also helps you to leverage blockchain, okay, the different components to address the different business requirements effectively. And it would help you develop a business case, okay, for you to implement and become valuable for your organization. Now, if you look at the certificate program in blockchain leadership, It is aimed at, it could be for entrepreneurs, designed for decision makers. Again, okay, it is 14 weekends, 2 to 2.5 hours, okay, per session, and it is fully online, interactive, and there is an optional consulting also that would be available post the program, and it would help you align, okay, blockchain strategy for your organization, integrate it to your organization strategy, and it helps you create a high-level blueprint, okay, for adoption of blockchain. And at the end of it, okay, it's about growing your business with new blockchain business models. And it helps you reduce cost, okay, of current business practices and the technology, okay, using blockchain technology. And it also helps you identify areas where you can use blockchain as a tool. And this slide, okay, tells you the global faculty, okay, who would be supporting Professor Srinivasan in this course. And I must also emphasize, okay, being a university, you get real certificates. Okay, it is not an edutech company offering, okay, so-called certificate. It's a real certificate, and the global faculty would include Keith Beer, who's a fellow of the Center for Alternative Finance from Judge Business School. Pratap Tambe, extremely well known and head of BFSI, Cyber and Blockchain Consulting of TCS based out of London. And Jain Mohan, again, another well-known name, country head, okay, of TradeStream. And Devendra Tripathi is the managing director, country head, okay, for the Financial Service India Market Unit of Capgemini. And Prem Kumar Balasubramaniam from IBM Consulting based out of Ireland. And Bhushan Joshi, competency leader of the financial markets and wealth of IBM CIC India. And these are representative names. There would be more names who would be supporting Professor Srinivas. Yeah, and I'd be happy to answer any questions in case you have any questions.
There is one more question for Professor Srinivasan.
Yeah.
So will
blockchain facilitate UPI payments or transactions too? Sham is asking, will blockchain facilitate in UPI payments or transactions too?
The UPI payments are already happening. There may not be a lot of blockchain-based UPI for the time being, unless there is any specific requirement, and some banks do it. But UPI is already happening, and it is more for internal country, so it will continue to happen. The CBDCs can make some change when the CBDC based payments start happening, because central bank digital currency is already on blockchain. So based on that, blockchain based payments can happen, but not the UPI payments per se.
All right then. So thank you, and we look forward to seeing you in the program. We will take the liberty of sharing, okay, some of the links, the brochures, and further information on the program. Reach out to you, and would be very, very glad, okay, to answer any questions, queries that you may have. And I'm sure, okay, you would leverage this program and enrich yourself. And for those of you who are very, very career oriented, we would recommend the certificate program in blockchain management. And if you're a leader in the industry, the blockchain leadership program, the second one. All right. Thank you so much, and have a restful evening. Thank you.
Thanks a lot, everyone.